morning, I'm James Gruber. Welcome to the morning report for the 24th of April. Well, the developments on the US-Iran war keep coming. Tensions are rising. There's a lack of progress on peace talks, and that's impacted markets. The US president is back on social media claiming total control over the Strait of Hormuz and has threatened on Thursday morning US time to sink Iranian mine-laying ships, while Iran has released footage purporting to show its troops storming a large cargo ship for trying to cross the strait without a permit. There are reports too of air defence systems activated in Tehran. And in news just out, President Trump has announced that the ceasefire between Lebanon and Israel has been extended by 3 weeks. So it's tense again. And when you look at the oil price, it's sharply higher again too. I'll take everyone through the reaction on Wall Street in a tick, as I want to look at what's on the cards for the Aussie share market first. The ASX 200 futures, they're pointing to a flat open this morning. On Thursday, the ASX 200 closed lower, dropping 0.6% to 8,793. The bottom performing stocks, as Stevie and Laura discussed yesterday afternoon in the podcast, were Temple Webster and Lynas Rare Earths, down 8.2% and 6.7% respectively. The index has lost 1.8% for the last 5 days, but is virtually unchanged year to date. Moving to commodity markets, and on those, oil prices, they jumped after reports of air defences engaging targets over Tehran, and also of a power struggle between Iran hardliners and moderates. On that, Iran's top negotiator, who's considered a hardliner, resigned. Brent crude futures settled 3.1% higher at just above $105 a barrel. Among other commodities, base metal prices were mixed. Copper futures fell from multi-week highs, down 0.6%, as stalled ceasefire talks weighed on prices. Meantime, aluminium futures were up 0.5% as investors focus on ongoing supply disruptions from the war. Gold futures weren't so fortunate though, as they dropped overnight on a stronger US dollar, with futures settling down 0.6% to $4,724 an ounce. Lastly, not much news with iron ore, which left their prices flat. Let's now look at currencies. The Aussie dollar was last trading 0.5% lower to 71.28 US cents as investors sought safety in the US dollar. Now let's go back a step to see how Wall Street and other world markets did. Here are the headlines. The Dow Jones index finished down 0.4%. The S&P 500 index also dropped 0.4%, while the Nasdaq index dipped 0.9%. So investors were waiting for clearer signals on the US-Iran war, and there was also a batch of mixed earnings reports which reignited concerns about AI-driven disruption. The S&P 500 software sector tumbled over 5% on these concerns. IBM slumped over 8% after revenue growth slowed in the first quarter on weakness in its software business. Meanwhile, business software company ServiceNow plunged 17% after reporting sales slowed due to the Middle East war. Tesla shares fell 3.6% after the company raised its spending plan to more than $25 billion for the year. That was despite a better than expected result after market yesterday. Defence company Lockheed Martin dropped almost 5% after reporting a lower first half profit. Meanwhile, car rental company Avis Budget shares slumped 48%. That's a lot, but it's following an incredible rally that's a bit reminiscent of the meme stock craze. One gainer for the day was Texas Instruments, which surged 19% after forecasting second quarter revenue and profit above Wall Street expectations. Moving to US government bond yields, they let go of most of their gains after data showed initial jobless claims rose by 6,000 to a seasonally adjusted 214,000 for the week, higher than expected. The US 10-year Treasury yield was up 3 points to 4.32%, while the US 2-year Treasury yield was 4 points higher to 3.83%. Let's move now to the European markets. The continent FTSE-wide Euro First 300 index ended up 0.1%, while the UK FTSE 100 slipped 0.2%. European investors were, like those on Wall Street, worried over collapsed US-Iran peace talks, but also weak economic data outweighed upbeat corporate results. Let's go through it. Nestlé shares jumped 5.9% after the world's biggest packaged food company said it had seen very little impact from the Iran war so far. Nokia shares surged 6.4% after the network gearing maker raised growth targets for its AI business and beat first quarter profit estimates. L'Oreal shares jumped 9%, recording its biggest one-day gain since 2008 after the French cosmetics group posted first quarter sales that beat analyst expectations. And Roche shares rose almost 4% despite the Swiss drug maker flagging a drop in first quarter sales due to foreign exchange impacts. On the economic front, business activity in the Eurozone suffered a surprise contraction in April, with the Iran war sapping demand as prices soared. So let's now take a look at what's on the watch list. Besides watching war developments in Australia, there'll be quarterly updates from Insignia Financial, PLS and IGO. In the US, there are first quarter earnings reports today from Norfolk Southern and Procter & Gamble. The University of Michigan's Consumer Sentiment Survey for April will also be released. And that's it for today. For further developments on the local trading session, please tune in to the CommSec Market Update podcast this afternoon and, of course, the Market Close video. Have a great day.